Fed's inflation rising amid tariffs. How will the Fed respond? Inflation is surging, and it's not just about rising prices at the grocery store. New data from the Commerce Department reveals a troubling trend. The Federal Reserve's favorite inflation gauge is hotter than expected, with tariffs playing a growing role in the economic mix. Here's the breakdown and why this matters for your wallet and the broader economy. Consumer prices climbed 2.6% year over year in June, according to the Personal Consumption Expenditures, PCE, price index, a key metric the Fed closely watches. Even more striking, the so-called core PCE index, which excludes the wild swings in food and energy costs, jumped 2.8%. These numbers exceeded economists' predictions, and earlier months were also revised upward, suggesting inflation is sticking around longer than anticipated. Here's where it gets tricky. Tariffs imposed by President Donald Trump are now clearly leaving a dent in the economy, pushing prices higher and nudging consumers to tighten their spending belts. And this is the part most people miss. Tariffs aren't just about trade wars. They're reshaping how we all live and spend. The timing is no coincidence. Sharper tariffs are set to hit countries like Canada, a major U.S. trading partner, starting this Friday. Canada's auto industry, in particular, could feel the brunt, which might ripple through supply chains and further strain prices. Meanwhile, the Fed faces a tough choice. It left interest rates unchanged for the fifth consecutive meeting, despite calls from Trump and some officials to cut rates to boost growth. But with inflation still well above the Fed's 2% target, slashing rates risks fueling a price spiral no one wants. Here's the rub. Inflation isn't just about what you see at the checkout counter. Recent reports show the Consumer Price Index, CPI, also rose in June, driven by pricier imported goods like appliances, furniture, and toys. Fed Chair Jerome Powell acknowledged the dilemma, warning that tariffs could either cause a temporary price spike or lead to long-term inflationary pressure. His cautious stance? A clear signal that the Fed isn't ready to gamble on rate cuts yet. But Trump isn't happy. Just days after praising Powell following a visit to the Fed's headquarters, the president lashed out on social media, calling Powell too late, too angry, too stupid, too political. He accused the Fed chair of costing the country trillions and warned that inaction could derail economic progress. Meanwhile, consumer behavior is shifting. Spending on services like hotels and restaurants has dropped for 3 straight months. The first such decline since the 2008 financial crisis. People are cutting back on discretionary splurges as essentials like rent and insurance keep climbing. So what's next for the Fed? Officials remain split. While 2 members of the Fed's board dissented this week, preferring a rate cut, though not the drastic cuts Trump demands, the central bank is holding its fire. Powell hinted at waiting for more data before making a move at the September meeting. But the stakes are high. Trade tensions could slow growth and spook markets, yet new tariffs risk prolonging inflation. Some economists even argue that inflation's effects might outpace signs of a cooling economy, complicating the Fed's already murky calculus. Here's the big question. Is the Fed's hands-off approach the right call, or is Trump right to push for aggressive rate cuts? What's your take? Drop your thoughts in the comments. We want to hear if you think tariffs are a necessary evil or a recipe for economic disaster. Consumer spending versus rising inflation. What you need to know. In June, consumer spending saw a slight uptick, but so did inflation, a delicate balance that economists are closely watching. But here's where it gets controversial. As tariffs begin to take a more visible toll on prices, will consumers continue to spend at the same pace? Or will they start to rein in their wallets? Despite the rising cost of goods due to tariffs, U.S. consumers kept their spending momentum going, contributing to overall economic activity. According to the Commerce Department's latest report, consumer spending increased by 0.3% in June compared to May, when spending remained flat. When adjusted for inflation, the increase was even more modest at 0.1%. This report offers a detailed snapshot of price changes, household incomes, spending patterns, and savings rates. It revealed that inflation also picked up steam last month. The Personal Consumption Expenditures (PCE) price index, which the Federal Reserve monitors to keep inflation at its 2% target, climbed by 0.3% month over month, pushing the annual rate to 2.6%, its highest level since February. Tariffs are gradually making their presence felt in the broader inflation landscape. However, Doug Foucher, chief economist at the PNC Financial Services Group, notes that consumers, who drive over two-thirds of economic activity, are managing reasonably well. Consumers are largely holding up okay, he told CNN. The report indicates that personal income grew by 0.3% in June, and the savings rate remains stable at 4.5%. We're observing moderate growth in consumer spending, Foucher explained. The economy has slowed down over the past year, with slower job growth and income gains leading to reduced consumer spending growth. He added, on top of that, tariffs, both the price hikes and the uncertainty they create, are making consumers somewhat more cautious. Economists anticipated a 0.3% rise in PCE from May's 0.2% and an acceleration of the annual inflation rate to 2.5%, up from the initially reported 2.3%. The revised figure for May's annual inflation rate was 2.4%. Excluding volatile sectors like energy and food, the core PCE index showed a significant price increase in June, rising by 0.3% from May, the fastest gain in 4 months, and maintaining an annual rate of 2.8%. The slight heating up of the PCE price index was partly due to rising gas prices, which had been declining throughout the year, and higher costs for goods as businesses passed along tariff-related expenses to consumers. Indeed, the report confirmed these trends. Energy prices jumped by 0.9% after dropping 1% the previous month. Goods prices increased by 0.4%, with durable goods up 0.5% and non-durable goods up 0.4%, marking the highest monthly rate since January when prices rose after holiday discounts. Durable goods prices were up 0.5%, Foucher noted. These fluctuations can vary from month to month, but they suggest that tariff costs are being passed along to consumers, and we're likely to see more of this in the coming months. President Donald Trump's trade policies, characterized by widespread and highly volatile tariffs on imports from various countries, are beginning to affect consumer prices and inflation rates. While tariffs are technically paid by importers, the cost increases are often distributed throughout the supply chain and eventually passed on to consumers. Although these higher tariffs aren't expected to cause a dramatic inflation spike similar to what Americans experienced in 2022, the price hikes will still be challenging for many. It's going to be uncomfortable for consumers, Foucher stated. They'll start noticing that their paychecks don't stretch as far as they used to. Stock futures reacted mildly to the latest spending and inflation data. Dow futures rose by 100 points, or 0.23%. S&P 500 futures increased by 0.92%, and NASDAQ 100 futures gained 1.33%. This report has been updated with additional details and context. Contributions to this report were made by CNN's John Taufigi.